All right, so today I felt compelled to do a special quick weekend lesson through some back testing. Uh, Back testing, particularly some Poloniex coins. Now, we've seen a lot of blood in a lot of markets, and I anticipate we'll probably see a lot of bounces. I'm just focusing exclusively on just a few quality markets instead of the shotgun approach. But one of the reasons why I wanted to jump on the mic and do some back testing and just to talk about things is, um, for months I've been warning people about buying coins that are really, really high, right? And just saying, you're better to just stay out of them unless you're trading them with, specific measured targets. Like, what's an example of a specific measured target? This is Stellar, for example. So look, it came down to the 78 level, big crash, and then it bounced up 3 levels, right? So that would be, I didn't take that trade, but if you were to trade markets like this, then that's the kind of, and you could stack sell orders between here and here because nobody knows exactly which fib level it's going to go up to, right? That would be the type of trade that one can take on markets that pump and rally like this, right? But this is why I've been telling people. I said, this is bubbles are the best time for trading, and definitely some of the worst times for investing. Unfortunately, a lot of new people, when they come into crypto, they don't know much about trading, so they're looking to invest. And so when they look for investments, they look for things, hey, this has gone up 1,000,000,000%. So they'll look at something like Stellar and say, wow, this is a hot market. It's gone up 1,300%, 1,400%, right? Whereas, like, I'll look at something like that and I'll be like, wow, that's a disgusting looking market. I think I'll stay out of that one. Unless you have a very specific type of trade. But I just want to back test some of these big Poloniex coins, right? Because Poloniex is all the rage. I mean, yeah, there's been a couple hot markets, some B-Trex for sure, like Edgeless, UBQ, stuff like that. But several months ago, it was all about, last spring, it was all about the Poloniex pumps, right? And a lot of this is probably just whales fleecing new money, playing games, right? When you have some liquid markets, it doesn't take much to start to push things. So here's probably the worst performing market from the, we'll measure just percentage from the top to the bottom. So here's a market that lost 85% of its value, right? So unless you had very specific measured targets for trades, if you were just buying this, anywhere up here when it seemed the hottest, then chances are you'd be bag holding. And, you could see this classic descending triangle formation, right? Very bearish pattern. And that's that, right? So there's all this talk about, oh, are we going to hit a bear trend? Are we still in a bull trend? So on and so forth. Well, the answer to that is it depends on the market. Obviously, for something like Stellar, it's been in a bear trend for months now, right? I mean, Bitcoin trend is still intact. Some other markets, maybe like Ethereum Classic and stuff like that, it's still intact. But for a lot of markets, you know, they've already had their bear trend. They've already fallen. I mean, if you lose 86% of your value in a few months, I mean, it doesn't get any more bearish than that, does it? Now, it doesn't mean we can't have some nice bounce plays and stuff like that. I mean, I tend to like buying things that bleed out a bunch, but this one I'm staying away from predominantly because obviously the best time to buy would have been right here on the really sharp dump. Usually sharp dumps produce nice bounces. But there's a difference between a sharp dump and a slow bear grind, like a bear channel. It's not to say it can't bounce out of that bear channel, but this is, you know, you notice how the retraces here are weak, right? Very, very weak. So if you're ever hunting for dip buys, you're always better off hunting for ones that have very sharp, pronounced selling. You know, very sharp, pronounced blood. Especially on the initial correction after a pump. There's usually always like a secondary bounces. Right? You know, the dead cat bounce, as you will. The return to normal. The this is fine phase. The back in action phase. Right? I mean, this, so you'll often, when you get a very sharp dump, you'll get these kind of retraces, right? Let's look at some other markets that flopped on Poloniex that turned into garbage. Here's a good one that flopped, and this one didn't even really have nice, sharp, pronounced dumping. This one just it just grinded it, right? Would have been very difficult to try to catch bounces on that. So here's another market that, you know, bled out 65%. Like these are no small numbers, right? It's one thing, and let me just say, you know, it's one thing being, you know, minus 40 or 50% on maybe some mid or low cap token or coin that perhaps you're accumulating that hasn't really taken off yet. At least, you know, at least there's a prospect of some future upside potential. And one could bag hold some mid caps and still perform well with patience. Obviously, depending on the market. I've had some where I've been like minus 40 and then end up like plus you know, plus 300 or whatnot. Digibyte. Here's another trash token. and don't forget, folks, these were all the rage. All the rage a few months ago. You remember? Everyone's going on about this. Oh, this is so good. Oh, should I buy this? Should I buy that? What do you think of Digibyte? Here's one, minus 80%. Right, you know what this is? This is a pump and dump. This is a whale messing with you, fleecing the wool off your back. Right? This is why I don't chase those pumps. I'd rather, I call it the joy of missing out sometimes, you know, when you don't chase the pumps. And so anyways, you know, definitely, I mean, if you get in early, the way to get in obviously would maybe be, you know, dip on something early, the first signs, or an accumulation. Actually, the best area would have been accumulation. or, you know, the first markup. Actually, the first signs would have been like more down here. But, you know, made 3 waves up. Dun, dun, dun. And obviously, the higher the price goes, the bigger the game of hot potato is, right? So that's Digibyte. Let's look at Ripple. I mean, this was a real hot market. Yeah, you could. I mean, if you caught this pump, you could have made a fortune off of it. If you chased the top, you would have been completely wrecked. So, Ripple. Ripple. So Ripple's down, you know, from its top, it's down 65%. Ripple was a market that a lot of people kept on asking me about. I think you know, a lot of people were asking me about it when it was in the 50-cent range. What's the price now, dollar-wise? Now it's 23 cents, so it's like minus 50. But I remember people asking me wanting to invest in this when it was at 50 cents. You know, and if you had invested in it at 50 cents, I mean, it's not to say it can't bounce and all that stuff, right? But look, these bounces are getting weaker and weaker, right? And in my opinion, you know, descending triangles aren't really that bullish. But can recover? Sure. I mean, any of these coins can, right? But the thing, this is why you have to be a contrarian, right? Human psychology, you know, your mind tells you, oh, it's such a hot investment. It's so good. 50 cents. Wow, it came from half a penny. It's a trap. It's a big, nasty trap that wants to take your money, that wants to part you from your money, your hard-earned Bitcoin. So, you know, if you got all hyped up into the Ripple hype and started buying at 50 cents, dollar-wise, you'd be down 50%. It's also one of the benefits if you had some to sell into strength. Right? But, you know, can it recover? Sure. You know, it definitely can. I mean, look at this. This was kind of, you know, boom. This is like more consolidation. And then, so if you see a market like this and you're like, oh man, fear of missing out, you should tell yourself you've already missed out. It's over. Right? Can it bounce? Can it recover? Sure. But that's a different story perhaps. Like even any descending triangle in crypto, you know, there's no such thing as like necessary textbook rules or textbook trading. I mean, even a descending triangle can turn bullish if you break the descending trend line. I mean, I've seen this happen, right? Anyways, what other markets are there on Polo that flopped big time? All right, yeah, let's look at Strat. So Strat definitely flopped. This is my recent dip buy that I just sent a trade alert out for. You know, like big descending triangle, like I mentioned before on Strat, right? I think it was last week I drew this descending triangle because the chart's still here. Now, the thing is, it's interesting about this market. There's generally two kind of major bounce areas. There's depending on the liquidity, there's 61.8. There's 78%, and that's usually you'll get some nice bounces. But what's interesting about Strat, and this is the reason why I bought the dip, and I bought the dip on this one because this one looked like it bled the most out of a lot of the recent bleeds. I mean, except for the ones I just showed you, but I also kind of wanted to base it more on quality of project as well. So you'll notice that it dropped 3 fib levels on this retrace and then bounced 2 fib levels up, right? And recently we've dropped 3 fib levels again from that point, right? Little Mickey Mouse bounces or whatever, just like anywhere there's like little bounces, but predominantly it's mostly red, right? Very weak bounces, mostly red. So I would say it's dropped 3 fib levels. So it wouldn't surprise me, because Bitcoin still seems like it's just consolidating. It wouldn't surprise me to see it bounce a couple fib levels. Now, will it bounce exactly 2 fib levels? I don't know. Will it bounce at all? There's always a possibility that it won't. Sometimes markets bounce. Sometimes markets bounce down here. I usually don't do weekend classes, but if I ever feel compelled to, I'll jump on randomly. Different times, including weekends. This morning, I felt inspired to record something since we've seen a lot of blood and everything. And I also kind of just want to explain my rationale more behind my strap dip buy. Now, I didn't want to just go shotgun buying dips on everything. I just kind of want to concentrate and pick one market. I actually kind of bought it like down here, right? I helped produce a little wick here. I did a market buy. So somewhere down here. Maybe I was support. I don't know. Actually, where's my entry? Just one sec. Now, can it flop and dump more? Sure, right? I mean, position sizing is very important and key here, right? Especially, I would say I would call this market like medium liquidity. What do I mean by that? Well, it's got about 400 Bitcoin in buy support, so it's not terrible. I've seen worse buy support, like obviously a lot of the mid caps. This is like a higher cap market, right? A lot of the mid caps have much less buy support than that, less volume, and a lot of the low caps are actually quite pathetic for buy support and volume. So that's generally why I don't talk about low cap trades. There's a lot of traders right now who are dumpster diving on Cryptopia, and a lot of Cryptopia or Craptopia coins seem to be doing all right because they're such low caps that they're like long holds, right? So that's why last class on Wednesday I just did a lesson on that instead of telling you which ones I go out and hunt and buy, because they're not liquid. So I don't want like over 800 people getting trapped buying up illiquid markets. I say I say go on a treasure hunt. You know, anyone who doesn't know the technique, look at the last lesson. Use the methodology that I used. Go on a treasure hunt, your own personal treasure hunt, and maybe scoop up a few, but position size, right? Don't go too heavy. Don't get trapped in any one market in case it flops on you, right? So, you know, it's dumpster diving for hidden gems, right? And try to buy ones that aren't already pumped like 600% or stuff like that. Like I'll give you an example. You know, a lot of people like talking about DOT and stuff. And if you got in early, like great. But you know, I look at a chart like this, and it's definitely not my cup of tea, right? Like nothing about this, even though it's a mid cap, nothing about this looks appealing to me whatsoever, right? You know, now if you bought in accumulation, so here's the thing, like, let me just preface, like, if you're going to play that strategy, either buy on a major correction, a major, like, bloody candle, or buy an accumulation when it's sideways, but don't go buying just because it's a low cap. I mean, this is a liquid coin, right? Like, don't go buying this. Look at this. One whale could take a dump on you, and this could be in the red 80% in a heartbeat. Snap your fingers, this could be 80% in the red, right? You could lose, you buy at these levels, you could lose everything you put into it, right? Whereas, like, you know, another example of a mid cap, that's creating more of a consolidation pattern that's kind of newish. Still not very liquid, so, you know, you got to be careful. You got position size. But, you know, it would be something like this. And I think this is only like double what its ICO price is. You know, or like, you know, when I bought Expect, I'll just show you where I bought Expect. And I'm not endorsing or saying, you know, go buy Expect or anything like that. I'm saying, like, everyone should make their own decisions and go hunting. Like, I don't want people losing money, getting fleeced, pumping illiquid markets, right? I want to try to avoid that. But there's still value in hunting for your own low caps. And just acknowledge that some of them are going to be duds, okay? Like I showed you in my last lesson, 2 out of 5 picks were complete duds, right? So I bought Expect, you know, when it was sideways in accumulation, right? And now it's like, you know, it's up quite a bit, right? So just keep that in mind, right? Keep that in mind when hunting for low caps. Don't chase the ones that are up 600% or whatever, because you're buying someone else's bags who bought at the bottom. I don't know. That's just my personal rule with the low caps. Nothing wrong with dumpster diving for low caps. What about the good-looking ICOs that are near ICO price? Yeah, I mean, if you can find some nice, cheap deals on some mid caps or whatever that are close to ICO price, or even below, then yeah, if it's too much above ICO price, I wouldn't be surprised to see things, you know, drop more. But also, like, I would just concentrate on a few markets instead of the shotgun approach. That's, you know, that's just my opinion. I would just concentrate on a few quality markets. So the shotgun approach worked really, really well several months ago in the spring. Unless we see another second wave of everything, it you know, could obviously work again if we see another wave, but I'd rather just concentrate on a few markets at a time. You know, make it count. So Big Turbo's saying that CFI might be dropping below ICO price soon. Yeah, looks like a drop, but this is for me. This is like a longer term hold. So I personally don't look at the day to day prices that much. It's kind of in the investment set and forget. Like let me look at it in a year or when it does something really nuts. If it does something really nuts. So I just know that they've got a lot of cool projects on the go, and they're gonna establish. I believe they're gonna establish a name for themselves for quality projects. You know, their sentiment project that they just helped out went really well. X8 currency, I bet you traders are gonna drool over that. Um, yeah, they're affiliated with ICN, and ICN I think is just a beautiful example of something that dropped below ICO price and was actually a real top performer. I mean, this was no small, like check this out. You know, it dropped below ICO price here. And, anyone who even scoops them up below ICO price, um, you could have made more. I mean, obviously, if you sold the top, actually, we kind of did sell the top, but you could have made 1,300%. That's not even dollars. That's Bitcoin. Dollars, it was even crazier than that. Um, dollars was like, this was the long game. We got into ICN like right on the token sale. Like, that was one of my ICO picks last year. And that was a really big performing market. Yeah, probably about the same. I don't think they have all the data because I think it was around longer than that. So that to me is a prime example of a patience play or a forest from the trees type of investment. Now, if you could flip and make, if you can flip and sell at 3x the ICO price and then buy back in cheaper, then yeah, that's definitely a smart play too, right? Just like ICN, if you could have flipped higher than the token sale price and then bought back in cheaper, then definitely, then that's trading to accumulate type of thing. But it's hard, right? Hindsight's always 2020. What's and Strat was another one that I was in like for forever, and that was another big performer. I didn't sell the top on that one, but I was talking about Strat when it was over here, right? And there was all kinds of little things happening with Strat, although never fell below ICO price. But I think when I got into Strat, the price was right here. This is when I got into it. So, and then you look at these waves, they look like massive waves, right? Big deal. And then a year later you look and it's like, oh, that was like what waves? This looks like a flat line. All right, so now in Strat producing a nice little hammer candle. And the beautiful thing with that is if the price of Bitcoin can hold up or move up or consolidate, then what usually will come after a hammer candle as traders start to see this, the next day we might see a green candle, right? So let's look at some other Polo things that dumped. Oh, let's look at Doge. Here's an interesting one. I always I always scratch my head when I see people shilling charts on markets that are, up here. Right? Like there were people shilling Doge when it was up here in this range. I don't know about you. I've traded Doge many times, and I would never touch this with a 10-foot pole on these levels. Of course, nice bounce though. Obviously, nice bounce. But this looks very heavy, drippy. Anytime you start to see big wicks like this, big drippy wicks, you know that the price is getting heavier and heavier, right? Like, look, descending triangle. Honestly, the real money in Doge is made off of the larger cycles. Right? You buy down like 35 satoshis and lower, and you sell 80 or higher. Here and here, it just keeps on doing this. This time I went up higher because there's lots of money, but like for myself, like I wouldn't even touch it these levels. But here's another example. If anybody was chasing Doge, oh, Doge is back. Oh. Well, from the top to the recent drop on the bottom, that was like a 71%. 72% drop. Now, people might have, if you cut out of some mid caps, some people might have taken the odd hit on some mid caps, or, if you bag held the some mid caps, just for the patience game, I'll tell you, you've got definitely a much higher probability and chance of some upside than chasing garbage that's up this high. Right? Like a lot of those mid caps haven't even really rallied yet, right? So if I had to bag hold anything, I'd be bag holding new stuff that were mid caps. I'd be more comfortable in bag holding that than these more established markets. These more established markets that have pumped ridiculous levels, right? So I was warning people. I was saying, stay away from these. If they pump this high, like, don't start buying this stuff up here, right? Very, very dangerous. What are some other interesting markets? Let me just take a peek here. I'd also like to point out on the video that just be very careful with a lot of these new ICO tokens that come out, and especially if they're above the token sale price. The reason for that is anything that's above the token sale price is profit for anyone who participated, and that means that eventually that gap could close, right? And the thing is that we're getting too many tokens. It's a flood, right? And they all seem good and like big projects and that, but the markets we're getting tons of, every week there's new tokens hitting the markets. Every week you're having to look up new tokens, new markets, new this, new that. And none of these are liquid, okay? Like, look at all of the liquidity. I don't care what the rage is. Most of these lack liquidity. Right? And they're all competing against each other for market share. You'll probably get a few that are some real gems, but you could just get a bunch of duds too. That said, obviously, since a lot of these ICOs are since a lot of them are producing returns, there's something to be said about participating in them and just flipping a quick buck, right? That's something to be said, but that takes that'll take a lot of work, and you got to compete, race everyone else, right? All right, let me just find some other market. All right, here's another nasty one on Poloniex. NXT. NXT is the future, minus 60%. this is just a dip. This is just a dip. You know, like every time altcoins dump, everyone on Twitter is like, oh, it's just a dip, it's just a dip, it's just a dip. You know, minus 30%, just a dip, minus 40%, just a dip, minus 50, just a dip, minus 60, just a dip, minus 80. It's just a dip. This is fine. Everything's burning down. Right? I mean, you know, knife catchers on a lot of these would have been wrecked. The bounces were kind of weak. Right? Now, you know, can markets like this bounce now that they've bled out a bunch? Sure. You know, I wouldn't be surprised to see a bunch of bounces on a lot of things. Right? I mean, you know, it hit 61.8%. I was kind of looking at this today, but I picked Stratus over it because I think it's a better project. You know, and, you know, bounces off of prior resistance, but still, you know, if you bought anywhere up here thinking that it was all just a dip, well, so I would say, like, if you're looking to catch dips, then you're best to wait. There's two main areas that are generally good for dip buys, and you're best to be patient and wait for those entries. And it all depends on liquidity. Like, one is the 61.8 level, and the other is the 78% level. These are two general areas that are really good for dip buys and bounce plays. Anything else, you'd probably end up catching some falling knives, right? That's just, so I took a stab at Stratus, and I just picked one. This was another one that I was looking at this morning, but I decided to just concentrate on Strat, more like a sniper approach, like I said. All right, so let's look at some other ones. Let's look at Lisk. Now here's you know, here's Lisk, right? So kind of had a bounce off of 61.8%. So if you're looking for dip buys on things, and you know, that bled out 56%, so on and so forth. If you're looking for dip buys on bloody markets, then again, be patient and wait for that, unless you're going like fib level to fib level. Like, obviously, if you wanted to buy at this fib level and you immediately stacked an order, you know, like one fib level up, you can snipe, you know, a quick 20% or 30% or whatever. For myself, I like to let these markets bleed out more, the 61 or the 78. And you could even go with like a win-win, right? Like, let's say you bought here, and let's say it dropped, and we talked about this a lot last year, the win-win strategy. You could have a larger position size down at the next level, right? And let's play with that. Let's say you bought here and bag held, like Strat right now, right? Just bought Strat 61. But let's say Strat flopped and went down to the 60, the 78. If I bought a larger position, then even if it bounced only between two fib levels, chances are it would bounce at least one fib level. Let's just go back to Strat and look at that. This is what I call like hedging my dip buys, right? Have some fuel in the tank in case something like that happens. So let's say Let's say you buy it here and it flops and goes to here, right? Well, you're faced with one or two choices here, right? You could either cut out at a loss, and a loss in this scenario would be a pretty brutal loss. You're looking at a 41% loss, right? Or you could cost average down at the next level and just sell everything on one fib level, bounce up. Right? So to me, that's a more sophisticated. Obviously, still comes with risk. Maybe it flops. Heck, what if it flops all the way down here? Then, do it to the 100% retrace level. I mean, if it just keeps dumping, eventually it's going to bounce, right? Generally speaking. And you have to be selective on which markets you do this with, right? Don't just do it on some illiquid market or whatnot. But so let's say you bought a position here and then it drops down lower, and let's say you just buy an equal position. Well, guess what? If you cost average down with an equal position size and you manage to sell and it retraces, you manage to sell one fib level up, then you're cutting out at a break even on the first entry and you're making 71% profit on the second entry. Right? So that's one way to manage it. Another way to manage is you just set a stop, cut out at like a 10% and maybe buy back in lower, right? So that's like one sophisticated way of being able to do that. Now this strategy tends to work much nicer on more pronounced dumps, right? Like if you're getting a slow grind bear channel dump, not as easy or clean to do it. If you get a sharp red candle to the downside, much cleaner, right? Let's look at some other ones. So, I mean, those are two. Either cut it early, minus 10%, or you cost average down. That's generally two ways to manage this kind of dip buy trade. You can cost average down if you're just playing spot market. If you're playing margin, you don't have that option. All right, let's look at XCM. Here's new economic movement. Here's a market that was all the rage. So check this out. Look, sharp dump down to 61.8. Had some prior support. Bounced three fib levels up. Could have made anywhere from 50 to 80%, depending on where you took profit. That said, if you were buying it anywhere in the highs, you'd probably be fairly wrecked right now. Let's see. So this one lost about, oops. This one lost about, 58%. All right, so SIA coin. SIA. If you bought the top, SIA. There's another gem, 56% in the red. Would I buy a dip at this level? I don't know. Not quite there yet. In my opinion. It could bounce. But these retraces are being kind of weak. So. Anyways, I just want to show everyone some examples. Some backtesting examples of why you should avoid chasing pumps, especially if it's already gone up high. I mean, if you get into something nice and early on the initial breakouts, you know, maybe like some initial dips or, you know, in accumulation, then that's a whole other story, right? But if you're getting into things that have been pumped like this, this is very, very dangerous, right? And when you're looking for those big bloody dip buys, you're better off to be patient and wait for like either a 61.8 or a 78% retracement. Anyways, so that's it for today's lesson slash market updates.